Hey guys, welcome to this part of our market preparation video. Now on this video we are going to go over New Zealand dollar pair, and throughout my backtesting process I have formed a simple process which is easy to follow called I.F.I.M, which stands for identify, formulate, implement and monitor. Now I usually break these two up, right? The first two, identify and formulate, I use this part of my analysis when I go through my I.F.M process to the higher time frames, right? I usually go, okay, identify. What do I need to identify? And I usually ask myself, well, Mandla, what's happening in the chart on the daily time frame, right? On the higher time frame, what is happening to the market as we speak, right? What direction do we have? I mainly look at two things in order for me to identify good price points: our direction and structure, right? And as you can see right now, what is the direction of our trend? And in order for you to simply identify a direction of the trend is when the market starts from our bottom left of the screen and is on our top right of our screen on the right edge. It's on an uptrend. If the market starts from our top left of our screen and is currently at our bottom right of our screen, the market is going down. And if the market is a little bit choppy and it hasn't decided on a good direction to move in, it's consolidating. In this case, the market starts from our top left of our screen, top left of our screen, and it's on the bottom right of our screen, which means that the market has been going down. And usually the market, as it ebbs and flows, it usually goes in an orderly fashion. By orderly fashion, I mean it breaks our previous support levels if it's a downtrend, right, and previous resistance levels if it's an uptrend. In this case, the market has been going down, right, down, and down. And as it has been going down, it has been breaking our previous support levels, becoming future resistance, right? Previous support becoming future resistance, and previous support right here. Now that the market has been going down, I need to formulate an opinion about it. Now we're on the F part, right? How do we formulate an opinion? This depends on our style of trading, right? Are you a counter trend trader or are you a trend trader? And I am a counter trend trader by nature. So in this case, the market has been violating previous structure lows, which gives us a sign that the market is more than likely to continue down lower. I'll be looking for next hiccup points to identify our long opportunities. In this case, our next hiccup point is at 63.53s, which is closer to our psychological levels. And I usually peel my eyes off for these levels right there, because those are powerful price points where the market is actually reacting sort of like support and resistance. And our last level where I think actually the market is about to hiccup if it does violate this level is at 62.38. Now what's left for me is for me to form a bias. Now that the market is going down, I'll be looking for going long. So in this case, we are going long. We don't think of any trading opportunity of going short. We are going long, and this sets us up for a confirmation bias as we go down to the lower time frame, which is a good sign, a good side of a confirmation bias. There's normally bad sides of confirmation bias, but that's another topic of another day. Okay, what do we see right here? Okay, well, on our lower time frames, I implement my strategy, and when we implement our strategy, I usually ask, what do I need in order for me to implement this strategy successfully? Well, obviously I need my tools. I need a set of tools that I use consistently in my technical analysis, which is ABCD patterns, Fibonacci ratios, and all of them. All right, so we're gonna apply our strategy and implement our tools. Right, first let's check for a projection of an ABCD pattern. Now that we know that price has gone down to this point, right, we have violated this previous support level right here. If price does come over to right here, we're gonna have an ABCD pattern lining up. Excuse me. Lining up at this low or right here, which is our previous structure, our support from the past. If you would scroll, we can see we have our structure level right here. Okay, let's go back to our 4-hour. Now that I have a ABCD pattern, a projection of an ABCD pattern, if price does react by becoming our future resistance right here, okay, what can we add to our set of tools? All right, we can add our Fibonacci extension. Let's check if we have our Fibonacci extension confluencing at this level of structure. Well, from our swing high back to our swing low and drag it back across, we have our 1618 confluencing at that zone. So seems like that's pretty this zone is pretty interesting, and I would like for price to come over right here, and what is left for me is to enter my trade through reactive analysis and then monitor my trade, right? So I'll be looking for price to eventually come down, give us double bottom, high close, and enter on this one. It's too early to project on stops and targets yet. I'll be looking for my ATR levels as soon as price does gets here, and then this is a pretty vague projection of our targets, but most likely our first targets would come at our 32 retracement. Okay, this is what I will be looking for. You can trade right here, okay, but the more you have confluence at a certain level, the more you are assured in your trading system that this it's a high probability trading area to trade at. So I'll be looking for price to hiccup at this point and give me a trading opportunity that is worthwhile.